Do we need monetary and maybe fiscal stimulus to keep this stock market afloat?
Well, they've responded in a great way by going a complete 180 and becoming dovish from the previous stance.
Yeah, the New Year's surprise by Powell, whatever you want to call it.
Exactly. And what you now see is that there are expectations, roughly about 50%, that they will reduce rates by the end of the year. And we believe that if this trade issue escalates, that they will have to support the equity markets as well as become much more accommodative.
I don't want to
overall.
make too much of it. The S&P in the middle of a 3-day downturn, but overall it's still been a very strong start to 2019. So put everything in context. I get it. But has the recent move, this skittishness, the nervousness of the market made you nervous?
It didn't make us nervous, but we do believe that the equity markets are somewhat overstretched or overvalued at this point. We are in a low return environment. And what will happen here is if this starts to escalate, they're going to have to reduce, and this is the IMF and market participants, reduce the expectations for global trade, for global growth, as well as perhaps S&P earnings. So there is a major impact that this could have on investor sentiment.
I feel like you're a guy that owns a car wash who just said he prefers dirty cars, because you're a stock fund manager, and you just said that the markets overall are overvalued. So then what do you do?
Well, you have to be in good quality companies. We believe companies that don't have a lot of debt on their balance sheet. They have to be quality and consistent. So we would look at consumer staple companies. The healthcare companies have gotten really beaten up over the course of the last 3 months.
Are you a buyer into that weakness?
We would be a buyer into that weakness. Also, we would be investing in bonds if you're a balanced investor.
Treasury bonds or corporate
Treasury bonds
wow,
and high quality corporate
You and the
bonds.
central banks, Chad, are the buyers of all that U.S. government debt.
Right, but this thing could escalate where this 15-16% return within the U.S. equity markets could dissipate, and you could see a 5 to 7% retrenchment in a quick, rapid way.
Which, listen, Jim Cramer's been calling for that. And by the way, many people would probably welcome. Would you welcome that? I mean, it's okay.
It's
if
okay.
stocks go down once in a while,
that's
it's
the
healthy.
problem. I think people are conditioned to buy because they think that the Federal Reserve will protect them. And when you have interest rates so low here in the United States and negative interest rates across the globe, that is the perfect recipe for asset inflation. But that doesn't necessarily mean that that's the most prudent course of action by central banks.
Okay, well said. We'll leave it there. Healthcare stocks, Treasury bonds.
And consumer staples.
And consumer staples.